Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Constellation Brands, and trust me, it's not as simple as cracking open a cold one, but almost. This filing reveals a recent money move by the company, and we will be getting into the details. Constellation Brands filed what's called an 8K report with the Securities and Exchange Commission, or SEC, on April 30, 2025. These reports are like a company's way of shouting, hey, something important happened and we need to tell everyone right away. This particular report is all about raising money to pay off debts and invest in the future. The main event happened on April 29, 2025, when Constellation Brands made an agreement to sell a bunch of notes, basically fancy IOUs, to a group of investors. Constellation Brands Inc. is the name of the company we are looking at today. They're a big player in the alcohol business, owning brands like Corona, Lidalo, and a bunch of wines and spirits. They're incorporated in Delaware, and their main office is in Rochester, New York. It's useful to know who these guys are for context. Now let's get to the heart of the matter. Constellation Brands made a deal called an underwriting agreement with a group of big banks like BofA Securities, BNP Paribas, Goldman Sachs, and JP Morgan. These banks are acting as middlemen, helping Constellation Brands sell these notes to other investors. The deal is for $500 million worth of senior notes. These notes are basically promises to pay back the money with interest by 2030. The interest rate is 4.8%, meaning Constellation Brands will pay 4.8% of the $500 million each year to the investors. The investors aren't paying full price. They are paying 99 onto 80/24 fast for every 100% of the $500 million each year to the investors. The investors aren't paying full price. They are paying 99 onto 80/24 force for every $100. That's a small discount. The sale is expected to be final on May 1st, 2025, but there are some things that need to happen first. These are standard steps to make sure everything is legal and above board. So what's Constellation Brands planning to do with all this cash? They're saying they'll use it for general corporate purposes. This includes paying off some short-term debt called commercial paper and other debts they owe. They also plan to use the money for working capital, which is basically the money they need to run the day-to-day operations of the business. Plus, they're looking to fund capital expenditures like new equipment or buildings and explore other business opportunities. To make this offering happen, Constellation Brands has filed a few important documents with the SEC. There's a prospectus, which is like a detailed sales brochure for the notes, and a prospectus supplement, which updates the information in the original prospectus. These documents are part of a larger registration statement, which is a formal application to the SEC to sell these securities to the public. The company is also including a legal opinion about the notes to make sure that everything is legally sound. This opinion is being filed as an exhibit to this report. This part lists all the documents attached to the report. First is the underwriting agreement, the contract between Constellation Brands and the banks. Then there's the legal opinion from the lawyers at McDermott, Will and Emery. Finally, there's a consent form from the lawyers giving their permission to include their opinion in the registration statement. There's also a cover page data file, which is a digital document that helps the SEC analyze the information in the report. This part confirms that the company has authorized the report and that it's been signed by a company officer. In this case, it's Garth Hankinson, the Executive Vice President and Chief Financial Officer, signing on behalf of Constellation Brands. Now, let's put this all together. Constellation Brands is basically taking out a $500 million loan by selling these notes to investors. They're doing this to pay off existing debt, invest in their business, and explore new opportunities. It's a pretty common move for companies to manage their finances and grow their operations. Looking at this filing, Constellation Brands seems to be in a stable position. They're able to borrow money at a reasonable interest rate, which suggests that investors have confidence in their ability to repay the debt. The company's plan to use the money for general corporate purposes is a bit vague, but it could mean they're looking to expand their business or make strategic acquisitions, which could be a good thing for shareholders. However, it's always important to keep an eye on a company's debt levels. While borrowing money can be a smart move, too much debt can put a strain on a company's finances, especially if interest rates rise or the company's performance falters. Investors should also pay attention to how Constellation Brands uses the money they're raising. If they make smart investments, it could boost their long-term growth. But if they waste the money on bad deals, it could hurt the company's prospects. Overall, this filing doesn't raise any major red flags, but it's a reminder that it's always important to do your own research and understand the risks and opportunities before investing in any company. Thanks for watching. If you found this breakdown helpful, please hit the like button, leave a comment, and subscribe for more Corporate Decoder videos. See you next time.